Friday, October 7th, 2016. Monaco 64, home of alternative economics and contrarian views. I'd like to thank one of my subscribers and viewers for warning me on the crash of the pound early this morning, or late last night. I was still partly awake in bed, looking at my my phone, and I got a message from this viewer saying, "Oh, have you seen the pound? It's dropped 12 big figures." And I was like, "Wow." Then I looked at my chart on the phone, and it was true. We'd gone to 112, at least on the system that I follow. And then I, woke up and came down to my study to make a video. Yeah, it was late, but I thought it was necessary. So this morning, the pound, of course, has rebounded. We are at 124.58, which is still about two big figures below yesterday's trading range, which was around 126.50. It's the foreign exchange market is not traded on an exchange. It's traded between the major banks. It's called an interbank market, and it's on the phone or on the screen. It's an over-the-counter market. So there's no central authority that governs the foreign exchange market. So yesterday's flash crash, some people are saying that the low was 118.40, thereabouts. Some people are saying it traded as low as 116. The system I use, IG index, they have the low on the chart. And last night, the low was 112. But today, the low, which is still the same day as yesterday because it happened after midnight London, they've got a low of 118 as a range. But you click on the chart, the low is 112. And I call them and they said, well, we're looking into it because we are not sure where it traded. Which is fine because it's, it's traded, they get their quotes from many different banks. And just wanted to talk about the reaction of the mainstream media today. So the FT, the major story is pound plunges 6% in 2 minutes. Rogue automated algorithm among possible causes for sudden fall. That might be so, but the fact that the pound can drop like that, from 126 to 118 or 112, wherever, even 118 is a huge move. It just shows that the underlying weakness and of the currency, because if the currency was in good condition, if it was a strong currency and highly liquid, you couldn't see that happening, in my opinion. I've worked in the markets for over 20 years, and I've never seen the pound do this, except for the Brexit, of course. But that was a completely different story because it was probably very, very liquid because, the referendum result was in a knife edge. Yet last night was just a normal trading day, opening up in Asia. So yes, blame the computers. I think it's more an underlying weakness in the pound, and it's done. It's being done by design by our government and our central bank. And I've repeated this many times. We've got an unsurmountable amount of debt, be it public debt, be it corporate debt, be it personal debt, and the economy is in bad condition, and the policies of the last 8 years haven't worked. We've pumped so much debt into the country, into the economy and the system. We're still running huge deficits. The economy is still, very moribund. So they need to write off the debt, and only a country that has its own currency, sovereign currency, can do that by devaluing the debt. And why do I say devaluing the debt? Well, because the debt is the flip side of the currency that we use. And so they're basically defaulting, and creditors are going to take the brunt. A lot of people are saying here in the UK, I've heard comments, oh, it hasn't affected the prices in the shop. Everything seems the same. But believe me, it will filter in the next 12 months, in my opinion. You can't have a currency, drop so much, over 40% in the last 24 months and not see some kind of effect. Some people will say, oh, the FTSE and the FTSE 100 and the FTSE 250 are doing really well. Well, let me give you some news. I think last year, one of the best performing indices in the world was the Caracas Stock Exchange. So there you go. What else? The Telegraph, they say sterling slumps. More than a slump, it was kind of a crash. 6% wiped off the pound in flash, well, they're calling it a flash crash. But was it caused by a fat finger error? Well, a fat finger is basically with electronic trading, and the reason why I say electronic trading, before electronic trading, up until the late 90s or so, the exchanges were, how can I say, open outcry, and people, hand signal, buy and sell. But actually, foreign exchange has never been traded on an exchange. So the mistakes were probably made on the phone. But a fat finger is basically, let's say you want to sell £1 million, and you type instead 100 million by mistake. You add 3 zeros. That's what a fat finger is. Yes, maybe there was some kind of problem in the electronic trading, but the thing is, it's not a centralized exchange. The pound is traded interbank like every other currency, and so I wouldn't say there's a fat finger because there's no exchange. Dealers are talking amongst each other and executing orders. So basically, yeah, it just goes to show the weakness of the pound. I even spoke back in June, late June after Brexit, looking at the charts that we could have a target of 120, and we hit it earlier today. We went through 120, and the only reason I could tell that is looking at the technicals. Just looking at the chart, I knew there'd be a consolidation. I said, is this a bottom, or was there going to be a consolidation and then a drop to match the drop just the day after Brexit? And the consolidation took a few months, but we've had the flagpole down through 120, so it's completed that. So interesting. What else can I say? Well, the other thing I wanted to talk about is the importance of owning physical gold and physical silver, especially if you live in a country where the currency is being basically destroyed, like here in the UK. For example, gold now is 1,008 pounds, and let's see, it started the year, I'll tell you where it started the year in pounds. I'm looking at the LBMA website. They've got the price for pounds, the pound fixing. And let's see, where did we start the year? We started the year at 725 pounds. So we're now 1,008. So it's been a great protection, against currency debasement, and I think it's going to continue being a great protection in the future. And that's despite the fact that in the last few days the gold price has come off over $50. So silver, the same story. Let's see where silver started the year in the LBMA information. So 4th of January, silver was at £9.47. So where are we now? £13.90. So there you go. Yeah, you could have had dollars, but actually you wouldn't have done as well in dollars as you're doing in precious metals. And with dollars, really, if you're going to keep a big amount, you need to have a bank account with a bank here in the UK that gives you access to US dollars, and there are not many of those who do that. So yeah, and this is not just advice for people in the UK about gold and silver. It's advice for everyone everywhere around the world, including the USA, especially the USA, because this is going to come home to the center of the system, which is the dollar system. And the big devaluation will be against gold because the dollar is the reserve currency. So there you have it. As I leave you here, gold is pretty much unchanged, 1254. The Dow is down 16 points, not much happening there. Silver is 1727, down about 3. The pound, 124.30. So still down 1.5% from yesterday's closing on the system here. We were trading above 126 yesterday all day, really. We're now 124.34. Be interesting to see what happens after non-farm payroll later on today. It's actually 9 o'clock, 12 past 9 a.m. here in London. So we still got like, let's see, 4 hours and 15 minutes roughly to a non-farm payroll number. So I'll talk to you later. If you enjoyed this video, please like, share, and subscribe if you haven't yet. And if you'd like to donate, there's some links below in the description. Take care. I'll talk to you later. Bye.